Okay guys, it's the end of the month. Let's see where the accounts are up to and whether they've been worthwhile. And a warm welcome to one and all. Now, if you haven't been here before, this might seem a bit odd because there's going to be a lot of numbers thrown at you, but it'll show you what's possible with a small account. Now, at the beginning of the year, the guys in the group decided that we wanted to sort of build an account. So that's what we've done. We started with Black Bull, and there is links for that below if you want to follow this journey yourself. And the idea was to grow £200 into something meaningful. Now, I did grow it up. A few people said it couldn't be done again, so I reset it in May, built it up, and it's actually paid me quite well. But I've been doing this for the last couple of years because I set one away 2.5 years ago, and I was starting to put money into a Vanguard account, and people got interested in the investing side. So what we're going to do is I'm just going to show you what the two accounts are, where we're up to, and what I'm going to do with them. Now, I used to do this every day, but there was limited interest in it. So now I just do it periodically, maybe once a month. But if you're part of the squad, we do talk about this pretty much every single day and go through it every day. So let's flick it over. I'll kind of show you its origins, which is here. And there's little Axel, Clog Dancer. He's just finished for the month. Excellent results. Little steps every day is what we're after. And as you can see, we go through it over and over. We constantly working our way into it. It's been a fantastic way. Now, also inside it, I'm trading it and I'm building things up. And we're also having little meetups, and that's what this is paid for. We're away this weekend. We're all off to this lovely hotel, which I'll be able to show you. There we are. We're all going there this weekend. Have a little bit of a merriment as one of the guys is emigrating, so it was a good idea to get us all together because we are a good community. So we're going to wish Rhino a good farewell, and then we'll have to see him on Zoom in his far off land. And who knows, we might end off going to Bulgaria and meeting him over there as well, because we're away to Benidorm in October for Scruffy's international meet. Yes, we going international, boys and girls.
We are international businessmen.
And that's what this has paid me. Now, this is where it gets quite good. Now, if I go to the summary, you'll see, restarted it, get it back to 1,000, blah, blah, blah. That's what I've done. So traded it up, and what I'm interested in is these here, which are baselines. Each month you want to start with a baseline to build on and then harvest your profits. Now, I had a stonking month, and there was a video about this where it was like a huge month. I had some amazing runs on gold and Bitcoin where I just let them run, and the results were amazing. Because one trade should make you, but one trade should never break you. Well, I had multiple that made me, and not only did they make me, they paid for Benidorm.
Oh, yes.
Woohoo. So I withdrew the money last week or so. And if you see the videos, you'll see that being done. And I'm left with £1,000 in the account. But I'm going to change that. And what am I going to change it to? I'm going to change it to a new account with less leverage. Now, let me do that for you. Let me just log on. Okay, boys and girls, and while I'm logging on, the Wild Wonders turned up. What do you want?
I brought you breakfast, and don't forget your banana. It's your healthy option.
Don't you forget my banana. That's your healthy option.
Oh, that's disgusting.
She doesn't eat it. She keep trying, but she's having none of it. Apparently, when we're old, we don't do that anymore. Wasn't that when you were 18, though?
Yeah, honestly.
I bet you could manage that.
So
actually, it's quite small, isn't it? So, what we do here, that's the small account that we're doing, the test account, which was 500 to 1 leverage. 500 to 1. Now, what we're going to do is we're going to change it over into this, and I've named it holiday account. Why? Because I'm just going to carry it on and buy holidays with it. Why not? It's already bought me 3. You know, the first withdrawal, you saw us go off on a ship. Then I withdraw it again and took Winky into the lodge where we were at last week. And now it's just paid for Benidorm. So there's 3 holidays that this is paid from 200 quid. I don't think that's bad. So what we're going to do is we're going to take the money out of there and put it in there. So what you do with that is you go to your wallet, go for an internal transfer, just like so. And I'm going to transfer it from that account. And we're going to transfer it into the new one that's being made, which is here. And it's going to be £1,000. Proceed. Bingo. That's it. All done. Drop up there. £1,000 is now in that account. So what's all that about? Why have I done that? Well, if you've got big leverage, it can actually be more damaging to your account than small leverage. Now, let me explain this. Everybody bangs on about leverage, going, oh no, I can't open up this and I can't trade that and I can't put this huge position size on because leverage is crap. I need huge leverage. I need huge leverage. No, you need no fucking leverage. You want to use as least leverage as you can, unless you've got a small account. Now, I know that's a contradiction in terms. When you've got a small account, you need the leverage to open up positions because of margin costs. And sometimes certain assets, the DAX, Pound JPY, Dow, are very expensive. So you can't even open up a 10p position unless you've got leverage. But the problem comes when you trade something like euro dollar, which is very cheap, because you could now use the leverage to increase the position size. And that position size will kill the account, because just because you can doesn't mean to say you should. Now, if you've only got, say, 200 quid and you put on a full lot, that account ain't going to last long. In fact, the biggest position size you should be trading with is about 20 pence. But I have seen people put 5 and 6 quid on. And then when the account explodes, which it will, they cry. And it's simply because they gambled in the first place. So reducing your leverage is actually a good thing because it controls what you're doing. Now, the 500 to 1 that I had to start, I needed it just to simply open up positions. You know, I want to open up a 20p position on cable. I want to open up a 20p position on gold. Without the leverage, you can't do it. But as the account grew, I can now reduce it. So now I've got a baseline of £1,000, which is a good position to be in. I'll reduce the leverage to 200. Now, when I get it up to £2,000, and that's my baseline, I'll reduce the leverage again to 1 in 100. And eventually I'll get it down to about 1 in 30, which is ESMA rules. And at that point, when I've got it up to there, which will be £3,000-4,000 maybe, I will change from MT5 to Web Trader, which is where my main account is, because I prefer that. So that's my plan with this. But where have I been putting the money? Well, let me show you.
Well, we're waiting.
Okay. So what I do with the surplus money, apart from buying holidays and treating the wild wonder here, there, get a feel of them.
You dirty old man.
I paid for them, I might as well use them.
I'd buy that for $1.
It goes here. Now, over the what are you laughing at?
I'm trying to eat my breakfast.
I was trying to get you to eat a banana. Hey, do you want a banana? No?
Your healthy option.
It could be your healthy option. You need your protein.
You are the most immature man I've ever met.
You're better not.
Yes, you are.
Not.
Oh, God, give me strength.
Ah, dear. I did do a poll, you know. I'll actually show you it. Here, give us a sec. Here we go. About videos, because been a little bit disillusioned of late. And I wanted to see whether or not I'm getting through. And there's been 39 votes. And 10% of you say, don't make any videos at all. And I can only assume they just don't like my sense of humour. Well, this is a bit odd, really, because 46% of people want it every single day. Now, that gives a little glow in my heart. It really does. Because if you want a video from me every day, you're going to get this sort of sick sense of humour that I have. So that tells me that there's a lot of happy people out there. And 10% you're a miserable sod, so on your bike. But it kind of amazes me, because if you don't like it, don't watch it, sort of thing, is the way. And a lot of people kick off about trading, and they don't like trading, but they'll watch it constantly and then cry about it constantly. Why? Fucking why? If you can't do it, learn it. And if you can't learn it, do something else. Go play golf. Play with yourself. I don't know. Do you want to play with yourself?
Are you sure?
Do you want a banana?
No, thank you. I've got some melon.
You've got melons. Yes, yes, yes.
I fell for that. No, I am actually eating more.
Hold on, boys and girls. So I don't know if you heard what she said there, and I put the camera on full blow because look how red her face is. Look how red that is. You naughty girl. You.
How does your missus put up with you? Must be my legendary prowess as a lover.
So what have you got in the bowl?
Strawberries.
You got strawberries on your melons.
Get on with your drink.
Oh dear, we were having a shit day, but we're having a good one now. Right, let's get on to this. Sorry.
You know what you're doing, do you?
No, I forgot altogether. Completely lost the plot. It's you. Yeah, you know, we've been married forever, and I still like you the same day as I did when the first day I saw you.
Oh.
And I'm talking about when I had you in behind the bush shelter. Right, sorry. Live your life and enjoy your life. And if you can't, just find someone that makes you happy, because there's clearly something wrong with you. So, a couple of years ago, in the squad, we decided that they want to look at investment, because they listen to that I do investment trading. And I do, because ultimately, everything we do is investment trading. You mightn't think it isn't, but it is. You're either investing to get a wage, you're investing to get a holiday, you're investing, in this case, for long-term goals and a slush fund. Now, what's a slush fund? Well, a slush fund is I don't hold everything in my trading account. Never do. I only hold in the broker what I need to open up a trade. Baseline. That's what it's for. Now, that means if I can cover my margins, etc., at the start, brilliant. If it goes wrong, I have to physically refund that account, which slows me down. And because it slows me down, it stops me blowing accounts up. So where do I put the money? Well, I put it in bank accounts and I put it in here. Now, in this one, it's kind of split into two areas. I want instant access money that I can get hold of if I need to refund something, which is in the ISA, and I take advantage of the tax-free sort of interest gain on that. Well, that means my small accounts that I run, I have a slush fund over and above what's already in the accounts of over £10,000, which is here. And that's returning me, if I don't touch it, 14.4%. So I'm quite happy with that. You know, I'm really pleased, because I don't even have to do anything and I'm making 14% a year. Now, most traders run at 20% a year, and if they do 20% per year, they're doing well. So when you see all these idiots talking about 20 and 30% a month, you can't sustain it. You can on small accounts, but as the accounts get bigger, you can't sustain it. Otherwise, you'd be the richest man on the planet within a year. Well, you're not. So it doesn't work. So you've got to be common sense. 2 to 5% steady growth per month is acceptable, then you'll do quite well. And if you think along them lines, you'll be in the game a long time, and in a very short period of time, 2 years or so, you'll find that you're able to generate income from that 2 to 5%. Why? Because you build up a fund. Very simple. My other fund is long term, which is called pension, which is here. And that is worth 77,000. So collectively, in my pot, I have 87,500. Now, I also micromanage this as well. Let me show you. Now, inside of this is certain pots. Now, I put most of it into this because we are at all-time highs. I don't know if the market's going to continue to grow. Well, if it goes into correction, that means a lot of these will start dropping off. Now, I did have a lot of money in the FTSE All Cap and the S&P 500. And as you can see, it's starting to lose money. Right. Now, is that altogether a bad thing? No, it's not. Because as the market moves down, the units I buy become cheaper. So it becomes a dollar cost averaging process. And each time it gets cheaper, I'll buy more and more, but I'll put the same in. So for argument's sake, say something costs me £100 and I put £100 into the index, it would only buy me 1 unit. Now, as the market moves down, they might eventually become £50, but I'll still put 100 in, which will buy me 2 units. So when they move back to the £100, well, instead of breaking even, I would have actually made 100 because I'll have 2 units. So I actually want the market to move against me. But I put the bulk of the money into this because it's a bond market and bonds very rarely fall. They return a small amount every year, between 6 and 7% a year. And I'm quite happy with that, while this is moving down. Now, when I see it's bottomed out, I'll then transfer that across to buy the cheap bonds for it to come back up and do the process. Now, I do that by tracking it. Now, this is my web trader. Unfortunately, if you sort of put up in here, and if I tapped in Vanguard, you'll see they've got all the Vanguard funds, which are here. Now, the funds that I have are these. So we can look at, say, the S&P 500. Now, the S&P 500, if I look at a daily point of view, is still moving quite well. But I actually want to be looking at a weekly view. So if I look at the weekly view, we can see it's growing. Now, it has dipped down. And one of the reasons why I took the money out is because I saw this dipping down. And now I'm buying back in, because even if it gets up to there, I'm quite happy. Now, the problem that I have is, how far can this fall? Well, it can fall quite a ways. Now, the last time it moved, so it was from that point to this point and then back. What happened was it got to the turning point of a 127. Now, those in the squad will know exactly how I'm working this out. And I could see that it dropped back down because a 127 is a key turning point. Now, as long as it doesn't break that 100, I'll keep putting money into it. When it breaks the 100, I have a problem because it's probably coming down for a correction around this area here. Why? 50%. That 50% coincides with where it stalled last time. That is a hell of a drop. So all I would do is I would just stay out of it for a few months, put money over in the bond market till it gets down here. But I won't do that till it breaks this 100. So as soon as it breaks that 100, everything that's in there will move over into the bond. Then I'll start dollar cost averaging all the way down to here. When it gets to here, I'll then move it from the bond market into this to then grow back up again. Simple process. Now, we also looked at the all cap. Now, this is the all cap. Now, if I look at the same principle, it's a similar picture. Look, follows the same sort of track. Extension. Started down there. It got up to in and around this area before it started to move. And again, there it is there. 127 turn point. Came down. It cracked onto the 100. So therefore, it's time to move the money out of that over into the bond. And that's what I've been doing. And that kind of tells me why it's losing money. So if I come back over onto my investments, this is pretty much time to get out. Okay, so what I would do there is we're just going to sell it. So I'm going to sell that, and well, what we'll do is we'll do it individually because of so there's the ISA all cap. There's £1,000 in there, so I'm going to sell that over and switch that over into this one. So that next, and we're going to put it into our life 60 100%. Next. Happy with what I'm doing. I'll show you what's going on. Submit. That's it. And now I'll do the pension pot as well. The reason why I'm doing it separate is because it gets a bit complicated if you try and do it in one go. It's a bit easier to do it this way. So just go like so. What have we got here? There's the all cap. I'm going to switch that. Same principle. All of it. Put it on a blended fund 60, 100%. Yes, I'm happy. Submit. That's it. Okay. So that's my overview. Drop that back on. And then we'll quickly look at the performance so you can see what it's been doing month on month. The portfolio is growing quite well. And if we go to investments, we'll be able to see exactly what's going on. This is it. As we can see, click on your performance so we can see exactly where we are. And there we go. So with total rate of return at the moment is 18.98. I think that is exceptional. I can live with that. And if we look at it month on month, just let it warm up. There we go. We don't win every single month. You have a couple of red marks, but it's growing. Every single month. Money, 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 money. Now, over a long period of time, this will become quite nice. Now, I get that to 100,000, which it will be probably this year. And if I can maintain just 10%, that's 10 grand a year goes into this. And it worked quite well. And then just for... I'll just pull down something. Kind of the profits from this. Just pull that down. There we go. There's a live trade running this morning. And there's my gold running in. And this is a mirror of what I would do on the small account. And the basis of this is it's the same principle. Work on fibs, work on returning points. Came up. There it is there. It's rejecting the highs. And we're taking it back down into the 38-50% of the last move. And that's it. It's a simple way of doing things. So I'm just targeting the bottom of here. And I do that every day.
I'd buy that for $1.
So there you are, guys. So I'm going to enjoy my coffee because we all know Scruffy likes it coffee. I'm going to go on wind up Winky all day because, well, why not? And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.